is gonna go down. Okay? And I think it's going to stay below 37.66. I don't think it's going to get above this price. Now, what this means is that I want it to miss. Okay, you see this miss? I want it to miss this area. Now, what this means with this box is that the price is not going to get anywhere inside of it. Okay, so let me delete this, and what this means is that price can do this all the way up here, and as long as it shoots down, I'm just fine. Okay, and the price may actually do something like that. And, of course, it's got to do this as well. Okay, it's got to stay outside of the box. Right? Go ahead and erase that. Now, the other style is a hit box. Okay, you can see that over here. Now, if I select hit, what that means is I think that the euro is going to get into this box. Now, that means the price could do this. Okay? As long as it gets inside of here, and what Awana calls the median price, so halfway between the bid and the ask, and that's an important piece of information. Halfway between the bid and the ask has to penetrate inside of this box. Now, one thing to keep in mind is if the price goes like this, it's missed it, hasn't it? It has not traded inside of this box. Okay? So price could do something like this, and then the option would pay out. And the same thing applies for the miss. The price could do, something like this, and it comes down. That would be, then the option would pay out. But, or also, as I illustrated before, something like this, or any combination of that. As long as it does not get inside of that box, the miss option will pay. So let's talk about how this works from a payout standpoint. First of all, let's go ahead and use a hit option. This would mean that we think that price is going to get inside of this box at some point. Go ahead and purchase price. We'll just use $200. Okay? Now, what Awanda is telling us is that if we put up $200, as long as price sometime between July 11th and July 13th gets inside of this box, they'll pay out $350.34. Now, because we spent $200 initially, that means we're making $150.34. 150.34 divided by 200. That's about a 75% return on our money if price gets inside of the box. Okay? So, you can see here what the minimum payment is, what the payout is. You can see the start times and the dates. You can see the maximum and minimum level. So if I wanted to raise this up, I could raise it up, and then it'll calculate again. You can see it actually went down a little bit. Okay? And that's for the specific reason that, that now, if price gets higher, I have the possibility to make money over a wider range of option prices. If I move the bottom price down, you can see down even below the current price, you can see here they're only going to pay out $197.41, which means you'll actually lose money. Okay, so that you've put up 200, they pay out 197. That's because price is below the current price. Okay, you can see here